Welcome back to Switzer and Australia's Business Channel. General Motors in Detroit made the decision to pull the plug on its manufacturing in Australia. So was it economically sensible for the Abbott government not to dangle buckets of money in front of this US producer? Or is it a decision we one day might regret? For an informed economist view, let's turn to Saul Eslake, Australian Chief Economist at the Bank of America, Merrill Lynch. Saul, thanks for joining us on the program.
Thanks for having me again, Peter.
Now, I had no intention of asking you this. I wanted to get into your crystal ball for next year, which I will at the second part. But I have to ask you, you would have your views on car manufacturing in this country. Is it something the government should have encouraged?
Oh, I don't think the government should ever have encouraged an industry to close down, and I don't think that was the Abbott government's intention. The issue really was whatever it was that Holden was asking from the government in order to stay in Australia, and I don't know what that is. The government presumably does. Was that a price worth paying in order to keep Holden here until the next time they seek further assistance from taxpayers? Now, in saying that, I want to recognise that the closure of Holden will be a significant blow not only to the people who work there and at Holden's suppliers, but there'll be further indirect consequences, especially in Adelaide and to a lesser extent in Melbourne. From a national point of view, though, the entire motor vehicle manufacturing industry employs about 46,000 people, including component manufacturers. That's just 0.4% of employment, and that's about as much as employment can move from month to month. So I don't want to speculate on whether Holden's departure following Ford's makes it inevitable that Toyota's will also go the same way. I just simply don't know. But what I'd also note is that there are roughly 5 times as many people employed in the distribution, sale, repair and maintenance of motor vehicles as there are in the manufacture of them and their components here in Australia. And if we don't have a domestic motor vehicle industry to protect anymore, then the government would have no reason to keep the 5% tariff that currently applies to imports of motor vehicles, and a 5% reduction in the price of imported motor vehicles could increase the overall market by enough to generate at least a few thousand jobs in selling and repairs and maintenance that could offset at least some of the jobs that will be lost as a result of the closure of Holden. Now, they won't necessarily go to the same people, and I don't know whether they will be at similar salaries, but I think all of those things are important to consider in the context of the ultimate impact of this decision. The other point I'd like to make it quickly, if I can, is that Holden will close in 3 years' time. And that gives the people who will be adversely affected by this decision and the businesses who will be adversely affected time to prepare, either for their exit from their existing jobs or businesses or to take on something else. And that means that there's much more ability to adjust to this blow than there would be if Holden had announced that it was going to close in 3 days or 3 weeks' time.
Precisely. Now, one thing I keep hearing all the time, Saul, is that the multiplier effect for the car industry is much more significant than many other industries. Is this right?
I don't doubt that the car industry has significant multiplier effects, and they're probably greater than, for example, apply to the financial services industry in which I work. But whether those multiplier effects are nonetheless sufficient to justify the amount of expenditure that has been given up to this point, and which Holden was presumably seeking to be continued or increased in order for it to stay in this country, that's the sort of question that when the Productivity Commission has examined it in detail, their answer has always been no. And while some people accuse the Productivity Commission of ideological bias, my own view is that the Productivity Commission does approach these things in a dispassionate and rigorous and whole economy standpoint rather than simply the views of producing sectors. So I put a fair bit of store by the analysis that they undertake.
OK. Now, what about the argument that, all right, we make a decision that we're just not in the competitive position to really make cars in this country. So the money that we've been throwing at the car industry for a long time, let's take it and build that infrastructure that people have been whinging about for decades and get some benefits to the overall economy and create jobs at the same time. Is that pie in the sky sort of stuff?
Oh, I think it's the right conceptual approach, Peter, but let's be realistic about the sums involved.
Yep.
And as I understand the existing legislation, the government was going to give the automotive industry $1.8 billion over a 10-year period, and the coalition had promised to slice $500 million off that amount after 2015. You don't get a lot of infrastructure these days for $1.8 billion. So while I do have a lot of sympathy for the idea that both the federal and state governments ought to be spending more on well-targeted and rigorously evaluated infrastructure, and I personally would not see major problems if governments decided to fund part of any increase in that sort of spending with additional debt, it would need to be bigger than the amounts which are involved in the winding down of public assistance to the car industry for it to have any meaningful impact.
Okay. I think it would probably help to a smaller extent with the West Connects. I think it's about a $3 billion project, but you're right, the numbers are quite small in relation to what's actually needed. So just in general terms, have we been putting off too long the fact that we are uncompetitive in some industries, and we need to start encouraging the sort of businesses or industries that create businesses like ResMed and Cochlear and other exporting type businesses?
Well, I think the first point I'd make, Peter, is that whether industries are uncompetitive or not is something that really ought to be decided by the managers of businesses and investors in them rather than by governments. Although, you know, as in other countries, governments do at the margin try to influence the decisions that companies and their boards and managements make. But ultimately, as I say, that's a decision that ought to be taken by the private sector, by people with skin in the game rather than by government. So that's the first point I'd make. The second point is that it's always difficult for any government to consciously decide to close an industry down, especially one that employs a lot of people and, as we've been discussing, has some significant forward and backward linkages to other parts of the economy and which employs people in some sensitive electorally parts of the country as the motor vehicle industry does. So no government would do that lightly, and although other governments have been at a similar point to where the Abbott government has been down now, I don't criticise the present government for making what would be a politically difficult decision to allow market forces to run their course. But the third point I'd make is that this is a decision that's been accumulating for a long time. I mean, partly because Australians themselves have shown that, given the choice, they no longer want to buy the kind of cars that the Australian motor vehicle industry has been producing for a long time, and that the industry itself hasn't been able to adjust to the shifting patterns of consumer demand. Something like this was probably going to happen at some point. It's obviously been compounded by the persistent strength of the Australian dollar, and despite what some people say, I don't think there's anything the Reserve Bank or the government can or should have done to push the dollar to a different place from where it is today, desirable though that outcome would be for many people. And you know, I just think that this is the way the world is evolving, that the capacity to build the kind of cars that people want to drive at the prices they're prepared to pay is moving to other parts of the world, particularly elsewhere in Asia. And the challenge facing us, as you said in your earlier question, is to look for other areas of competitive strength. And some of the companies that you mentioned do have those strengths in high-end, value-adding, cerebral products that command premium prices and thus can be produced in Australia at what are relatively high wages and under conditions of a relatively high exchange rate.
Okay, now, last question, because I know you never give me a short answer because there's always long answers required. But what do you think 2014 is going to look like, economically speaking?
Well, I think it will be a better year for the world economy than any since the onset of the financial crisis. And in particular, I think the US economy will come close to getting growth of 3%. I think Japan can probably achieve 2% growth, and in per capita terms, that's at least as good as the US. Europe, it's hard to be optimistic about, but at least it won't be contracting. And I think China's growth rate will be similar next year to what it has been, or likely to be this year, of the order of 7.5%. So the world economy, I think, think, will be in a better place than it's been for a while. But despite that, I suspect we'll see another year in which Australia underperforms its major peer group. I think we'll continue to have below-trend growth of about 2.25%. I think we'll see income growth even less than that because of the further decline in the terms of trade. I think as a result, unemployment will continue to climb. And if the currency markets don't hand the Reserve Bank a get-out-of-jail-free card, as the Reserve Bank has been pleading for in the course of this year, then I think it's probably inevitable that they will have to cut rates again.
Yeah, so you're saying that the best thing that could happen to improve the outlook for the economy would be a much lower dollar?
Well, that would certainly be of material assistance. Now, we don't want the dollar to fall too rapidly, lest concerns rise about the inflationary consequences of that or a massive capital outflow. But it would certainly improve the Australian economic outlook if the currency started next year 10 cents lower than it is today. I think there's also a good case, as we were discussing before, for the government to do, governments, I should say plural, to do a bit more on the infrastructure spending front, even if that means putting off some of the objectives that governments have about reducing the amount of debt they have, and that's something we might be able to look to the forthcoming federal budget in. But beyond that, as I say, I think the mining investment boom is unwinding. You can see that particularly starkly in Western Australia, where economic activity has almost ground to a halt over the last 12 months. And I think that will show up in Queensland in 2015 as the gas projects move from their construction phase into their production phase, which will be happening in 12 to 18 months' time to start. And secondly, I think the transition to growth led by other sectors of domestic demand is proving more problematic. The post-election surge in business and consumer confidence has run out of steam, as we've learnt over the last 2 days. Although house prices are going up, particularly in Sydney, that isn't translating into increased dwelling activity or consumer spending more broadly in the way that it has done in the past, because people with debt don't want to add to their debt and hence can't monetise the increase in the value of their housing. And as for non-mining business investment, which is the Reserve Bank and the government's other great wide hope, some of the obstacles that were there before the election are still there. The strength of the currency and considerable uncertainty over the outlook for energy prices, which for me is not so much a matter of the carbon tax, although that uncertainty looks like it will persist for longer than the government would like, but also the looming and very large increases in gas prices for domestic industries on the eastern seaboard that are occurring already and which will gather pace as the domestic gas market connects up to world markets once those LNG terminals in Queensland are open for business.
Mate, always great to talk to you. Thanks for joining us. Have a great Christmas, and I'll talk to you in the new year.
Yeah, thank you very much, and a happy Christmas and New Year to you too, Peter.
Thanks, Saul. After the break, we'll look at key issues impacting self-managed super funds.